Young Americans are trading the white picket fence for a stock portfolio. A Wall Street Journal analysis finds Gen Z homeownership is just 16%, and the share of first-time home buyers is at an all-time low. Meanwhile, the number of young people with investment accounts is exploding, up from 6% just a decade ago. It's a new model for building wealth. Rent, skip the down payment, put that money to work in the market. So, Jonathan, what do you think about this?
Well, I think the government really screwed up housing in this country. I mean, there's no reason that young people should not be able to afford a starter home. But it's Freddie and Fannie still owned by the government. And this period of those ultra-low interest rates during the pandemic, it created what's called the golden handcuffs. So you have so many people now sitting on these homes with 2% and 3% mortgages, no incentive for them to sell, and that's why the housing affordability is still off the charts.
Jackie, you're my pro-housing representative on the panel here. Mm-hmm. You get nervous for young people going this approach, or is it just something they have to do?
Because I tried to remind myself of what it was like having a sort of entry-level salary coming out of the workforce. I had that inflation adjusted. I'd be right where these kids are right now. And I remember that there was no disposable income. And I always tell you, my biggest mistake at that time was to not siphon out some of the money, force myself to put in my 401k, take advantage of my employer max, and be in the market. If there was one mistake I made, that was 100% it. So I see why these kids are doing this right now, because they don't have enough to go buy the home or to have the down payment, and they're thinking about how they can build wealth for the future. And I certainly think, and we say every day, that investing in the stock market long term is a helpful way to do that. And so I would say you can do it through a retail account, but if you can take advantage of the the tax-free savings, at least in the 401k, if you have that opportunity and an employer match, that's a great way to do it, to be in it, and to see that money grow and defer your taxes and pay them later.
Now, there's the Jackie way of investing, which is like in the stock market and, S&P 500.
That's what I'm not talking about. The degenerate gambling.
There are other ways you could do that, Dagan. I kind of just wonder.
What is my way?
She invests in ETFs. You're coming to her like, she's.
No, I'm saying that you could put money to work one way, but I think young people tend to put money to work a slightly different way these days. Maybe not so much S&P 500.
More risk.
A little more like the 80% Bitcoin, 20% Ethereum trade that Mike was talking about earlier. That, to me, sounds maybe like a little bit of a risky.
Maybe the Ethereum gambling is the old fogey trade over here, not the young buck trade. Maybe the young bucks are like safe. I'm joking.
If you've been buying NVIDIA, okay, so NVIDIA first had these gangbuster quarters in May of 2023. If you've been buying it since then, do you know how much money you've made? If you've been buying Tesla for the last 10 years, okay, and like Robinhood came out, this is 10 years ago, where you could buy fractional shares. So if you had 20 bucks or 50 bucks, you could buy a fractional share. So if you've been dollar cost averaging into Tesla, do you know how much money you've made? Right? And so I also agree with Jonathan, this housing mess we're in is a direct result of the government, right? So Fannie and Freddie owned 3/4 of the mortgages in 2008, of subprime mortgages, right? And so they subsidized it. We had overexpansion. And after 2008, seeing what happened, you had a generation of people that wanted to live in a city, live in a townhome, live in an apartment, close to everyone else. The COVID happened, and then boom. 12 years of slow housing formation in terms of buying the big home with the white picket fence, turn on a dime. Okay, and all that supply evaporated overnight, and then some, and then interest rates spiked, and inflation ran out of control, and now here we are.
Fannie and Freddie didn't own 3/4 of all subprime.
71%.
Not the real garbage. That was sitting in mortgage-backed securities that were spread out through the economy. The real no money down, no doc loans were not sitting at Fannie
but government
and Freddie.
Incentivized their creation.
I agree with that. And we haven't done bupkis to fix that problem. And people have not been selling. Home prices need to come down to fix that. But the reason the market has taken off great guns in recent years is because of these young people not buying houses, but instead putting their money in the stock market. I think I said that a few weeks ago, that's been a huge flow of capital into stocks and other investments. But one thing, like whether you use ETFs or mutual funds or your 401k or investing in the stock market, you should rebalance your portfolio. Like I'm a big believer in this. I wouldn't want all my money in NVIDIA, that you'd pull it back, because that way you're selling at the top. You're pulling back a little bit and putting it somewhere else, or put it in cash and just have it sitting there, and you're setting aside a down payment for a house at some point.
And one thing quickly to say, Dagan, to your point.
But that's not shoot the lights out. That's
Well, I mean, and about bringing prices down, absolutely. One thing that could help bring prices down would be more supply. But we still have all of these NIMBY regulations in a lot of big cities, California especially, where you can't build anything that's either 2 stories or 3 stories or too dense, so they make it very expensive for builders to actually build and get people in those starter homes.
do people want to live in those homes?
I don't know.
There's not a lot of room to build anything but multifamily in the biggest cities in the country. So if you want like a really beautiful home, an old home, you're gonna have to move to the Midwest. And I am talking my book when I say that.
Glad to have you in our panel family today, Michael Lee. Good to see you.
Thank you so much.
All right, take care.